Good morning and welcome everyone to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it is a grey mood on the Lal Street today, and it could be a grey day for one of India's largest car manufacturers, that is Maruti Suzuki. And why I say that is because, Santo, I feel that the company has probably missed the trick when it comes to pricing its latest offering, that is the Grand Vitara, the upgraded model of Grand Vitara. If you look at the pricing, I think they're priced it starting from about rupees 10.45 lakh rupees. And this is, of course, a very, very crucial car for Maruti, because this is one of the first, new models that are coming into the market from Maruti's stable. And there are a lot of hopes riding on this, that this will probably kickstart Maruti's comeback into the SUV market, Santo. But if you look at the pricing, although it has been priced probably closer to Hyundai Creta, it has been priced higher than Toyota's Hyryder, and that is where analysts at CLSA believe that probably Maruti might have missed the trick, Santo, because if you look at it from a market share perspective, this is now a battle for market share, not only in the overall car market, but especially in the SUV segment, which is probably the highest growing segment in the Indian passenger car market. And CLSA believe with this sort of a move, it will become very, very difficult for Maruti to make any sort of significant inroad when it comes to moving that market share higher from about 43 to 44% to the company's own aspiration of going back to above 50% level. And I think CLSA also made this point, Santo, that the street is getting just too optimistic when it comes to Maruti's ability to regain all of that market share that it has lost over the past 3 to 4 years to players like Tata Motors, Hyundai and others.
Well, CJ, there is a reason why the street is optimistic about Maruti's ability to regain market share. One is clearly it knows its industry only too well. And let's also not forget there have been other players which have lost market share but have managed to come back with a bang. Yeah. Mahindra and Mahindra being a classic example. So Maruti's strategy, typically, if you look at it, they've been very conservative. Even when it came to EV, they said that we rather we would wait it out and see how the situation unfolds and then get into it, because they're fairly confident that even if they're a late entrant to something, they will manage to get their act right over a period of time. And we have seen it in the past also. Slow and steady has been the company's motto. So I think, CJ, it's a little too early to write off Maruti at this point in time, and I'm sure there would have been a reason about the pricing. They could have as well priced it below Toyota's hybrid model, but however they've decided to price it at a slight premium. Maybe that also reflects a certain amount of confidence here. And the stock, as you said rightly, the street is very optimistic, and which is what led to a 40% rally in the stock over the last 3-4 months. And now the kind of some bit of selling pressure that you're seeing in the last couple of days, it has to do with the fact that probably now the market knows, at least in the short term, also given the uncertain market environment, probably it's time to take some money off the table. But this is a short term thing. Nomura is among those which believe that Maruti will be able to improve its market share to about 43 to 44%, and it's also penciling in a 25% overall increase in volume growth for this fiscal.
Well, Santo, I have mentioned this in the previously also on the show, that at this juncture, Maruti's pricing in almost 10 to 12% volume growth for perpetuity. That means that, according to Kotak Equities, by 2042, 2050, almost every car that is on the Indian roads will be a Maruti car. And I think that is where I think the point that there is too much optimism is reflected. I think, yes, there is a comeback happening here. There is a revival story here. But does Maruti deserve the sort of valuation multiples it is getting at this point of time? I think only time will tell, as far as I'm concerned.
Well, definitely, CJ. But if you were to minutely look at the pricing of many stocks, you will find that they're really factoring in very rosy.
I think that is true for Indian market.
That is true for most stocks, CJ. But here, what the market seems to be betting on is the track record of Maruti. And if you see from the time the stock has listed, if you were to hold on to Maruti shares for even let's say a period of 3 to 4 years, chances are that more often than not, you would have likely made at least market returns, if not more. So the stock has delivered in the past. The company has there has been missteps, no doubt, but that is part of any company. If you look at a track record, you will find that at some stage they have made missteps, but Maruti has managed to make a strong comeback every time, and so I think maybe it's still too early to write it off.
And that's a very solid argument, Santo. That said, let's quickly move on to the trade setup for today. And it is looking a little better as far as the SGX Nifty is concerned. The SGX Nifty is indicating almost a 40 to 50 point up move on the Nifty this morning. This is despite the fact that Wall Street yesterday closed again on a lower note, largely on interest rate hike fears and recession fears. Apart from that, if you look at the US bond market, there was mayhem there as well. The US 10-year Treasury rose very sharply, almost sitting above the 3.9% level. I mean, it was almost a generation ago that US 10-year bond used to give you that amount of yield. So clearly, a lot is happening at this point of time in global markets. But Asian markets also have started off largely on a mixed note. If you look at the Chinese market, Singapore market, they were largely positive, but Hong Kong was a bit negative. Of course, all of this correlates to the strength that we are seeing in the US dollar, and generally when US dollar is strong, emerging market equities like India, like China tend to suffer a lot. So far we have not seen that. Emerging market, Santo, at this point of time, if you look at emerging market bonds, which is something that the smart investors will always look at to gauge a country's strength. If you look at emerging market bonds, they've actually been outperforming bonds of developed economies like US or a UK or a Germany. So clearly, there seems to be a shift happening in the global economy, and I think there is some merit to the argument when people say that India is a bright spot. Not only India, I think the entire emerging market pack is emerging quite strongly out of this crisis.
Well, CJ, in the short term, the focus will largely be on the rupee, and if the rupee is volatile, which most people expect it to be, then we can't really bet on huge FII inflows coming in, the kind of inflows that we saw over the last month or so. For the time being, definitely that's going to, except for India dedicated funds, the other hot money which typically comes whenever there's an up move, that and that is unlikely to come, and for good reason. The good part probably is that you can count on some support from domestic institutions, because they've been selling over the last 1 month. So they would be sitting on a decent pile of cash which they can deploy, and they can afford to take a longer term view, considering that you're seeing steady money coming in through SIPs.
Well, Santo, if you look at it, I mean, if you look at some of the money market funds, the liquid funds, ultra short duration funds, which are basically your cash or cash equivalent, they are sitting on a cash pile of almost 8.7 lakh crores at this point of time. Of course, some of it is through corporates because of, they want to park money ahead of the advance tax payments in September. That would have already still happened. But even if you take that out, there's still a lot of cash still available in money market funds, which goes to show that once probably the volatility subsides, you could see a lot of investors taking out that cash and maybe start bargain hunting in this market. And I think that is where a lot of the market's confidence comes, that maybe we will not probably have to wait too long to find a bottom and, find that rally once more.
Well, that said, let's start with the stocks on our watch list this morning, beginning with Power Grid. Now, the stock has been under severe pressure over the last few trading sessions, and the main overhang till about this morning was the fact that there was talk that Power Grid may buy out Power Finance Corporation's stake in REC. And that clearly would have been a big dampener for shareholders in Power Grid. But now the Power Ministry has rejected that proposal, and that is likely to be seen very positively. According to Citi, there are many positive factors for the stock. Citi has a buy rating on the stock, mainly that it has a safe and stable model, high return on capital employed, and also a strong market share. Now, CJ, there's been massive amount of short build-up in the stock over the last week or so, when the stock collapsed all the way from 237 to 202. So now that this news has come in, I think probably you could see a dramatic short covering probably take the stock up in the short term.
Clearly, Santo, I think this clarification has removed a major overhang as far as Power Grid is concerned. But if you look at it from a, if you take this news part out and if you look at Power Grid itself, clearly it is going to be a beneficiary of what a lot of people are expecting is going to be a new capex cycle in the power sector. Given Power Grid's heft in the power sector, clearly it is going to be one of the major beneficiaries there. Apart from that, also if you look at FPI activity also in the stock, Santo, over the past 1.5 years, 2 years, FPIs have been largely buying a lot of utility companies, and NTPC and Power Grid have been top of the list for them. And this is largely, from the confidence that because India's power sector is now getting into a deficit mode, power sector earnings and profitability is something that will improve going ahead in the coming years. And you can see that in the way institutional money is moving into a lot of utility stocks like Power Grid. Apart from that, of course, in a volatile environment where energy is the new gold in that sense, because it's so scarce at this point of time because of what is happening in global crude oil market, what is happening with natural gas production. Energy has become the new commodity, a new currency in that sense. And in these sort of environments, a lot of global investors also believe that owning utility stocks like a Power Grid could provide you the outperformance that maybe the broader market could not. So in that sense, I think this is one stock that probably could find favor again with investors after seeing almost a 14 to 15% cut in the past 2.5 days sessions because of this REC news.
Well, that said, CJ, just one more thing, again, we'll have to see if there's a re-rating of the stock, because again this is another of those stocks which over long period have not created much wealth.
True, I think that is true of the entire power sector. So you can add NTPC and Coal India also.
So if you invest it for certain periods of time when you feel that the stock is deeply undervalued, and then you can make some decent returns, because this is not a stock where you hop in at any point in time and hope to make returns over the longer run.
I think Santo, I think even the undervaluation, overvaluation also is not really part of the game. The main game is whether there is a new cycle starting in the sector or not. If sector profitability are in an upswing, I don't think valuation per se would be that much of a deterrent, especially because PSU stocks in general, like a Power Grid, are anyway valued at less than what the market is generally going for. So you are not really that concerned about valuation, but I think what is more important is whether profitability is going to happen or not, and whether that can lead to any sort of capital appreciation going ahead. Well, one stock on my radar today is from the small cap space, and this is a very interesting name. This is Kenna Metal, basically, which is the Indian subsidiary of Kenna Metal Inc., which is a US-based, industrial goods maker, industrial machinery maker. Now, the stock is largely a proxy on India's impending capex and as well as manufacturing boom that a lot of people have been very excited about. If you talk to a lot of domestic fund managers, they have largely been betting on sectors like capital goods, sectors like power, because they're expecting the manufacturing activity level in the country to go up higher and higher, also thanks to the government's focus on the PLI scheme and other such things. Now, largely this company caters to the automobile as well as the manufacturing sectors like semiconductors and whatnot, so it can really benefit from any sort of boom that we might see on those front. Now, the revival in volume growth is something that markets is betting on, revival in volume growth as well as margins over the next 6 months, and that is why Edelweiss Securities has given a tactical buy rating on the stock recently, and they're expecting an upside of as much as 25%, Santo, over the next few months. So clearly, one stock from the small cap space to watch and keep an eye out on. Although, let me warn you that after rising almost 47% for the year, the stock recently in the past 2-3 sessions has seen a decent amount of correction, and I think that is largely down to the fact that the broader market has also seen a sell-off.
Well, a justified run-up in the stock price, especially if you look at the way the company's earnings have shaped up over the last couple of years. It's risen by almost 50%, even if you were to adjust for the pandemic year, but still nevertheless a decent performance. My only quibble is that the number is still not, the number for FY22 is not very different from what the company had posted in FY19. But that said, this definitely looks like a promising company. The good balance sheet, good cash generation, and also zero borrowings.
Yeah, I think, Santo, this is one of those stocks which you can safely put in the category of high risk, high reward. Of course, if the theme plays out, it's a theme stock. If the theme plays out to the T, then definitely I think there could be a lot of upside here. But if it doesn't, then you would need to know when to cut your losses if you do get into a stock like Kenna Metal.
Well, next stock is Ultratech Cement. Now, overall, cement stocks have been under pressure over the last month or so. Again, had a good run-up, but
pressure
now,
and in news.
Yes, in news rather. Sorry, not last month exactly. Over the last week, the stocks have had a good run-up, and now some bit of profit taking is setting in. But it would, I think, CJ, make sense to stick with some of the larger players in the sector, considering that the
going with the big guys.
Yes, going with the big guys. Clearly, considering that the overall outlook on the sector is still positive, and there is likely to be a price war given the way in which both the leading players have decided to expand their capacity, and the smaller companies clearly are going to feel the heat of such a war. Now, in the case of Ultratech Cement, the company's phase 1 of capacity expansion will be over by the end of this fiscal. It will add about 19.9 million ton to its overall capacity. The stock has been a good performer also, and I think this is, if you're taking a bet on the cement sector, then I would say UltraTech clearly makes the cut.
I think, Santo, yeah, I mean, it's clearly going with the cleanest dirty laundry, as they say. I think before I come back to UltraTech, Santo, let's quickly take a check at the market as we see the open of trading, and it's been a strong start, almost a 100-point move on the Nifty at this point of time, higher now above the 17,100 level as well, and Sensex also nearing about a 400-point up move at this point of time.
And good breadth, market breadth is pretty strong. 1400 stocks up and little over 400 stocks down. Nifty mid cap is up by close to about 0.8%. Nifty bank up 0.6%. On the BSE 2, advances are ahead of declines, 525 to 428. So still it's very early to say if this trend can sustain, given that overall the sentiment is quite...
this could also be a dead cat bounce, you never know, because but if you look at some of the strength in the market, the sectoral indices, all the sectoral indices on NSE at this point of time are in the green territory. Funnily enough, Santo, if you look at the India VIX, I think if we can bring up the chart of the India VIX, I think the India VIX is higher today this morning at this point of time. Oh, actually now it's turned into the red. It started off in the green territory, but now it turned into the red territory. So clearly, I think it'll be very important to watch what will, the traders who added short positions in the market yesterday did, whether they hold on to those short positions and carry it till tomorrow, because tomorrow definitely you will see a lot of short covering in the market, because it's just a day ahead of the expiry, the monthly expiry on Thursday, and generally you tend to see a lot of traders squaring off their positions a day before because they don't want to take delivery of shares as has been mandated by SEBI. Well, Santo, coming back to UltraTech, as I was talking about it, I think for me, I am very intrigued to know what will be the commentary from the company as far as the margins are concerned when the Q2 earnings come out next month, whether they indicate that there is still more pressure to come on the raw material front, or whether this is the bottom and therefore we are going to see recovery from Q3, Q4 onwards, is something that I think the market will also be watching out for. But even if margins were to recover in the next 6 months, Santo, I think FY24 and FY25 is the real time when you will see the pinch of higher competitive level in the industry, hitting the profitability not only of smaller players but even large players like UltraTech. And apart from that, the one risk that remains, and it's a small risk at this point of time, but the one risk that remains is the fact that the government's capex has not really picked up so far in the past 5 to 6 months. If there is any delay on that front, that could really pose challenges or raise question marks over the volume growth trajectory for the next 6 months, because let's not forget, analysts are very bullish that the next 6 months could see a good recovery in volumes, and if the government capex does not come through to the full extent, that could become a challenging part for the company.
Well, last stock on our watch list is Tata Power, a play on the rising demand for green energy in the country, and the stock has come off quite sharply. So at this point in time, it's more of a tactical play, I would say.
Stock Playing has on the mean reversion.
Exactly. So there was a lot of hype around its renewable energies arm, the stake sale which happened some time back, and since then the stock has come off sharply. But if you look at the overall power situation in the country, there's enough reason to believe that demand will only grow, and especially green energy, there is plenty of demand for that at this point in time. And given the fact that the stock has corrected a fair bit, I think it's something that one could keep an eye out for.
Well, I think, Santo, clearly in a market like this, whenever any sort of deep correction comes, theme stories or thematic plays or narratives will definitely get hurt more than any other companies or stories out there. I think that is what you're seeing play out as far as Tata Power is concerned. But if you look at it from a bit longer term perspective, clearly with the expectation that power sector profitability is going to go up, higher in the coming years, with demand clearly outmaneuvering supply at this point of time, I think Tata Power still remains a reasonable play, and with that premium that it is getting for its probably high growth renewable business, I think this is one stock to really watch out for over the coming years.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do remember to post your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading day.